Hey, what's up YouTube? This is Foxtail Digital coming to you again with Black Girl Stocks. And in this video, we're gonna cover the Golden Cross trading strategy. So when you use this method correctly, you'll really increase your chances of being profitable with your trades. It's very basic, easy to understand, and it can pinpoint you to finding good trades. You can use this on stocks, options, Forex, crypto. If you have a hard time deciding if you're gonna go long or short on a trade, do a call or a put, then this is definitely going to help you out. So in this video, I'm going to break down what the Golden Cross strategy is, how it works, how you can start to use the strategy to improve your trades, timing your entry and exits, and at the end, I'm going to show you a scanner setup to help you find stocks with this pattern. What's up? You know, this video is sponsored by Webull. Shouts out to Webull. And hey, shouts out to me for this merch. Okay, so make sure you look down below for this merch. Stock Trader. Okay. But first, if this is your first time watching this video, please make sure that you click that thumbs up button. It really helps the channel. Also subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. So a Golden Cross is a chart pattern where a short-term moving average crosses above a long-term moving average. Now, this is considered a bullish breakout pattern because whenever a short-term moving average like the 5, 10, and 50 period starts to move closer to where the stock price is, it's an indicator of the strength of a current uptrend. So we've talked about moving averages a lot before. When you're using a 50 period moving average, this is just going to take the closing price of a stock over 50 days or whatever period you use. So it can be 50 days. If you're looking at a 200 period moving average, then it's going to be over 200 days. But it's just going to take the closing prices for those days, and it's going to take an average of those prices. So when the stock price is trading above the moving average, then the stock is actively moving upwards based on past data. Now, if the stock price is moving below a moving average, then the trend is starting to move down. Prices are moving lower. And to make this video simple, I'm just going to use the 50 moving average for our short term and 200 for the slow moving long term. But just know that you can use any different time periods that you want. You just need one that's clearly greater than the other for this method. So you can use the 5 and the 20 period. You can use the 10 and the 20, 25 and 50, 50 and 200. It doesn't matter. Using different periods is going to show different strengths or lengths of the trend. And when I say that, for example, a 5 and a 10 crossover is going to have a shorter trend length than a 50 and a 200. As far as time frame goes, like the 1 hour chart, 15-minute charts and stuff like that, the concept of using the Golden Cross is going to be the same. So this is Tiblio, and it's an amazing online service that helps you find the best trading opportunities. They have multiple different screeners for credit spreads, bull and bear squeezes with a lot of trading activity, option sweeps to follow large trades and big money moves, and a lot more for your different trading strategies. There's a trading board so you can log all your trades as soon as you enter. You're gonna get real-time alerts sent straight to your phone and get a good idea of your percentage of wins and losses. You're gonna get access to fast market news on any stock, and that's valuable in itself. But the best feature is the community Discord group, where you can exchange trading ideas and get guidance from the Tiblio team. So you can sign up for $34.95 a month. That's less than a tank of gas, but make sure that you sign up with my link and get your first month for 20% off. All right, so make sure you check out Tiblio. So for day trading, you would want to look at closer charts like the 5 or the 10-minute chart. And for longer swing trades, then you're going to want to look at day charts, week charts, month charts. A golden crossover on a 180-day 4-hour chart is going to have a longer trend than a golden cross on a 5-minute chart. The golden cross pattern is easy to find, and it's going to happen in 3 different stages. The first stage is when there is a clear downtrend. Now, when the market is in a long-term downtrend, the 50-day moving average is going to be below the 200-day moving average. And when a new uptrend is starting, the 50 moving average is going to cross above the 200 moving average. When the price starts to consolidate, then that's when selling pressure is going to be overpowered by buyers. And this is what happens when the price hits what's known as a bottom of a trend. So you'll have a bottom for a downtrend, and then you're going to have a peak for an uptrend. And you're going to see a large gap between the short and long moving average. Then Then you'll see the second stage once the candlesticks start to go up for a while. So they're going to range and move up for a while. The price is going to increase. This is the point where the 50 moving average is going to cross above the 200 and it's going to fill that gap. And this is what's known as the breakout. Next is when the uptrend starts. And then you're going to start to see those moving averages kind of start to act like a support for the price. So the price is going to reach higher highs. And as long as the stock price and the 50 moving average stay above the 200-day moving average, then the uptrend is still intact. And the uptrend is going to be considered over when the death cross happens. Now, keep in mind, moving averages are considered a lagging indicator, and lagging means after the fact because the average is just following the price, and that by itself is going to be delayed. So just looking at crossovers isn't the perfect signal to buy in at that exact second. The golden cross is going to be a pattern that you're going to want to look for in strong trending markets. If you do this in a range, this is the easy way to get whipsawed out of your trade. And whipsaw is basically when you get into a trade and then boom, just like that, it moves against you. So that's called a whipsaw. So one way that you can use the golden cross for more profits is just using it as a trend filter. I'm all about the trend. The trend is your friend. So when the 50 moving average crosses above the 200 moving average, you're going to want to look for long positions. And then the opposite is going to be when the 50 crosses below the 200. That's when you're going to do short positions like puts, bearish plays. And when you're doing that, you can start to trade on the right side of the market. Now, for good signal confirmations and entries, that's when you use the golden crossover with leading momentum oscillators like the RSI indicator, the ADX with the DMI indicators, and the MACD. These are going to let you know when the uptrend is either overbought or oversold. That can definitely help you point out good entry and exit points. A common question would be, so should you use the simple moving average or the exponential moving average? Honestly, there isn't really a huge difference between the two. It's just that the EMA is going to be more responsive and faster than the simple moving average. So in my opinion, if you're doing day trading, then it would probably be better to use the EMA lines. And if you're swing trading, then use the SMA. But like I said, that's just going to be your personal preference. And now that we've gone over the basic concept of the golden cross, let's look at how you can set up a stock scanner and look for stocks that fit into this criteria for your watch list. All right, so I'm just going to use ThinkorSwim because, you know, hey, that's what I use, but I'm pretty sure you can use this on other brokers also. First, when you have ThinkorSwim open, click up here to the scanner. Because we focus a lot on option trading, make sure that your scan is set to all optionable. And, you know, this is only going to search for stocks that have options available. But, you know, if you're only looking for stocks, then just keep that set to all stocks. But for this, I'm just going to keep it on all optionable. Next, let's add some filters. The first is going to be a stock filter. And so this is going to be for your actual stock prices. And I'm going to set it to close. And you can just put whatever you're comfortable with. So stocks between $50 and $500, that's not too bad. The next filter is going to be for volume. So let's go to stocks again and go down here to volume. And for volume, we can use something around 100,000 as our minimum. This is going to point out stocks that are actively moving. The next filter is going to be beta. Stock beta is a measure of the stock's volatility compared to the overall market. So that can be any large market. The S&P 500 index has a beta of 1. So a stock that swings more than 1 is more volatile than the overall market. So it's going to have a beta over 1. We're going to want to look at stocks that are at least moving with the market. So we're going to set our minimum at 1. So we want something that's moving with the market. We don't want something that's not moving at all. This is going to be the meat and potatoes of this scanner. And it's going to be this study right here. So we're just going to add filter, go to study, and you're going to click down here and go to crossovers. And then we're going to go to moving average crossovers. Okay. And for our periods, like I said, we're just going to use the 50 and the 200. Make sure it says crosses above, and we're going to keep it with the simple moving average and the price price at close. And right here, this is called the aggregation. So if you want to scan for something on the daily chart, select the D. If you want to scan for something on the 5-minute chart, then change it to the 5-minute. But this one, I'm just going to leave it on the default day chart. All right, so let's just click on scan. Okay, so yeah, this stock had a crossover today. They had a crossover also, but it's looking like they had a little death cross, so that was a little short. And the last thing that you can do is create an alert for this list. You're going to get notified anytime a new stock with the golden crossover is added to this list with your different criteria. So right under here, under the scan button, you're going to click on this hamburger menu right next to that. And you see down here where it says alert when scan results change. Click that. So you can choose to get an alert when stocks are added or when they're taken away or both. And then they have the option where you can actually have this sent to your phone. Yeah, that's just kind of something that you can do with that. So you boom, 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 get it as soon as it happens. So I'm going to end that there, but make sure you guys check out this video on setting stop losses for your option trades. So this is one of the best ways to minimize your losses and take a lot of emotion out of your trading. So give yourself that confidence boost and check this video out, okay?